Hi there, good afternoon. You're watching Market Fatafat on ET now. I am Snehi Shah. With me as always is Ankita Saxena. This is a show where we'll be taking you through all the big buzzers in today's trading session, tell you why these stocks are under the spotlight today, and also give you a technical check on all of those stocks, on some of them rather, when we bring in our expert on board today. But before we do that, let's just take a quick look at the markets. And Ankita, give us a roundup of what the market is up to. We're still below the 23,000 mark when it comes to the Nifty.
Absolutely, Snehi. We are not managing to scale those 23,000 psychological levels on the Nifty. In fact, we're very, very flat right now. Just look at the chart. No recovery coming in for Nifty as far as the Nifty chart is concerned. No recovery. It's absolutely flat right now. In the last 1 hour, in fact, there has been no significant move. Nifty Bank has managed to recover from the lows, even though that is not giving much moves. But nonetheless, it has recovered almost 130 odd points from the day's low. So Nifty Bank is giving a clear outperformance. And what's really aiding Nifty Bank is HDFC Bank, which came out with its operational updates, good operational updates, and a bullish brokerage note is what is powering that stock, and that is really aiding Nifty Bank. So Nifty Financials and Nifty Bank is still in a good stead, but as compared to other sectors, all other sectors are trading in the red. In fact, Nifty Metal is taking a sharp knock today. It is down almost 5.8% in trade. This on the back of course, the Trump tariff and the demand outlook that's very, very weak right now, and also slowdown in the business activity globally that's leading to a fall in Nifty Metal. Nifty IT continues its sharp knock since yesterday, and for a while now. In fact, yesterday Nasdaq saw a cut of almost 6%. So that effect is coming on Nifty IT. It continues to reel under pressure with cuts of 3%. Besides that, pharma is another pack that is in focus today. Now, yesterday we were rejoicing that the pharma pack has been exempted from the tariffs, but come today, the party is over already for Nifty Pharma because Trump has announced that there could be tariffs very soon on the pharma sector as well, and it could be more than what people are expecting. On the back of that, Nifty Pharma is also declining away in trade with cuts of 4%. So clearly, all the major sectoral indices are trading with cuts. Nifty Auto also in the slow lane, trading with cuts of 2.4% as the tariffs kick in from today as far as the auto sector is concerned. Except for banks, all the sectors looking bleak, Snehi.
Absolutely. Freaky Friday is what we're seeing on the market today after Tariff Thursday. So, well, that's how the last two trading sessions have been for us. But on that note, let's welcome on board Arpit Beriwal, the manager and derivatives analyst, equity researcher at Motilal Oswal Financial Services, and from our in-house research team, we have Rabinder joining us. Good afternoon to both you gentlemen. Before we come to you, let me talk about the big story of the day, and of course, it's the entire pharma group of stocks. The likes of Cipla, Divi's Labs, Dr. Reddy's, Sun Pharma. This is on the back of an announcement, or rather a reply coming in from US President Donald Trump when he was interacting with a reporter earlier. He said that tariffs on pharma will be coming soon. They're viewing pharma as a separate category, and tariffs in pharma will be at a level that has never been seen before. So this is something, this commentary and the uncertainty around what could happen in pharma has got the entire market spooked. And on the back of that, Nifty Pharma is tanking away, only second loser to Nifty Metal, which is tanking away slightly more. But in the US pharma market, generic drugs account for roughly 90% of prescription volumes, out of which Indian companies supply roughly 60% of the total generics volume. So that is a significant export opportunity for India, and the tariffs could possess a big risk to that. Currently, India imposes 10% tariffs on US pharma imports. US does not impose any tariffs on India. Stocks with the highest exposure to US, like Zydus Life, gets 47% revenue from the US. For Oro Pharma, that's 46%. Dr. Reddy's has 46% revenue from the US as well. For Lupin, 38%. Sun Pharma has 32% revenue exposure to the US. Cipla, 27%. Glenmark Pharma, 22% as well. So all of these stocks are tanking away. In fact, Cipla is down almost 6%. Same story for Lupin as well. CLSA has come out with a note, a slightly optimistic note, that says that they believe that the risk of very high tariffs to Indian pharma companies is low due to this, and they're saying that even if the tariff is imposed, they believe that Indian pharma companies will pass their costs on due to their dominant share. So a slightly optimistic note coming in from CLSA, but other than that, all these stocks, the likes of Dr. Reddy's, Sun Pharma, Cipla, Lupin, Glenmark, Zydus, all of these stocks are tanking away anywhere between 3 and 5% in today's trading session.
All right, keeping with the pharma sector, then A. Vaidesh, former Vice President and South Asia and Managing Director at GlaxoSmithKline Pharmaceuticals, shares his views on how no additional tariffs still now at least is a positive news for the pharma space, although he also adds that India's pharma sector needs to be prepared to review the cost structure and capex for the long term. Let's listen in.
look at US is the big market for China or for most all the countries, right? If US is becoming unattractive or not being available to you, they may have to, instead of dumping it in other parts of the world, they really have to relook at the way in which they have created capacity. And one advantage is that the other countries like India may get an opportunity to utilize this particular window of opportunity, as we call it. And I can only say from a perspective of the future for pharma, definitely it is positive for Indian pharma industry. But however, I know for sure is that companies will be looking at cost takeout programs, efficiency improvement, how do they do the capex, all have to be relooked at in this new regime of a new paradigm. All pharma companies will come up and tell you what are they doing to make sure they are competitive.
Okay, so that's the expert take coming in on what would happen for us if there was, tariffs imposition on pharma and how that would pan out for the entire market in the pharma sector as well. But let's move on. And Arpit, ICICI Bank is a stock that you've picked out for us. Last 1 year has been good for the stock. Today also amid a largely sideways market, the stock is managing to be in the green to whatever little extent. Last 1 month also good 10% uptick coming in on the stock. Do you believe that better days lie ahead for the stock as well?
Very good afternoon, everyone. So, if you look at the overall banking in the NBC space, and today, if we see, due to the global weakness, we have seen carnage selling across all the major sectors. But however, the silver lining over here from last 2 months has been the outperformance within the banking space. If we talk about the overall chart structure of the Bank Nifty, it's quite strong, and within that, ICICI has been the lead outperformer. So technically on the monthly scale, it has negated the formation of lower highs, a strong bullish candle. On the weekly scale, some cool off was seen from the higher levels, but it has retested its previous breakout zone near 1300, 1320 levels. On the daily scale, negated the formation of lower highs. And today also, if we see overall, the Bank Nifty is relatively outperforming and kind of flattish near 51,500 levels, mainly due to led by HDFC and ICICI. So technically also it's trading about its 50 DEMA. And slowly, steadily, definitely next couple of months, we can see an outperformance within this space. And ICICI is likely to lead to scale new record highs towards 1360, 1380, 1400 plus levels in next 1 to 2 months view. So ICICI Bank would be a preferred pick within the banking space. One can buy in the range of 1325 to 1330 with keeping stop loss of 1290 for an upside move towards 1400 plus levels.
All right, moving on then, ICICI Bank on the charts, but moving on to another counter, that is Mazgaon Dock. This stock was declining away in trade on the back of the fact that it tanked almost 6% in morning trade. It is on the back of the fact that the government is likely to offload 4.8% stake via OFS. Now the offer for sale in Mazgaon Docks opens tomorrow for non-retail investors. Now retail investors can start bidding from Monday, but government will divest 2.83% stake equity with an additional 2% as green shoe option. Now that's the word coming from the DIPAM secretary Arunish Chawla, and also the OFS will open for institutional investors on Friday, and the retail buyers, like I said, can start putting their bids starting Monday, which is 7th of April. So on the back of that stake sale coming in on Mazgaon Docks, that's tanking away in trade now, more with cuts of 6.5%.
Cuts coming in on 6%. The government is likely to offload. In fact, it is going to offload stake. On the back of that, that stock is tanking. Rabinder, coming to you, Avenue Supermarts or D-Mart as we know it is the stock that you've picked out. Quarter 4 updates looking largely mixed. Tell us what it is.
In focus in trading session where company has announced its Q4 FY25 business update, and the company's standalone revenue from operation for the quarter ended 31st March 2025 stand at 14,462 crores, and the total number of stores as of March 31st 2025 stand at 415. Company added a 28 store in Q4 FY25 and 50 stores in FY25, and there are also some brokerage note coming in on Avenue Supermarts where Morgan Stanley has maintained their underweight rating or Avenue Supermarts with target price of rupees 3,260, where they say the company's Q4 business update was in line with the estimate, and a 5-year CAGR at 18.5% was higher than the fiscal Q3 18.2, and 5-year CAGR was lower than the average of 20% for Q1 FY24 and Q4 FY24, and the estimated SSG for the quarter to be between 8 to 9%. And Citi has also come out with a note on Avenue Marts where they have maintained their sell rating with target price of rupees 3,350. Although the Q4 number was good, but the stock is down over 3%.
Alright, that's Avenue Supermarts in the back of that news flow. But coming to you, Arpit, Bharti Airtel is the name that you picked out for us. Tell us, what are you seeing on the charts for Bharti Airtel? I mean, if I look at the chart for Bharti Airtel, the stock today, it's very flattish today, but in the last 6 months it has it has given returns of 6%. I mean, it has outperformed the market at least, and last 1 month it has shown some good moves of 11%. From here on, do you see a positive momentum coming into Bharti Airtel?
As rightly mentioned, we have seen relatively outperformance in this counter within the telecom space. So if we see the current market structure, very few counters are trading at life high territories. If we talk about the technical structure overall, so Bharti Airtel has seen one-way rally from September 23 to almost, if you see the monthly start, till September 24, and post that it has been in a sideways range from last almost 6 to 7 months. But the good part is that it is kind of forming a pole and flag pattern breakout on the monthly scale, which clearly indicates that the buying is visible at the lower levels and the stock is ready for a next up move in next 2 to 3 months positionally. So chart setup wise, a strong bullish on the monthly scale. On the weekly scale, it is able to hold above 1720, 1730 levels comfortably and holding well at life high territory. So chart setup wise clearly indicates the outcome is likely to continue and it's likely to lead from here, and can see good gains of 6 to 8% slowly steadily going forward towards 1820, 1850 levels. So within the telecom pack, Bharti would be a preferred pick. One can go long at current levels or minor dip in between 1740 to 1750 with keeping stop loss of 1700 for an upside move towards 1820, 1850 zones.
1850 upside. Next levels to watch out for on Bharti Airtel. Let's move on and talk about a stock that's tanking away largely in today's trading session and mirroring most of the stocks in today's trade rather, and that's Tata Motors. On the back of a CLSA downgrade note coming in, CLSA has downgraded the stock to an outperform from a high conviction outperform, and target price has also been slashed to 765 rupees per share compared to 930 per share earlier. The stock is currently trading below that as we speak. Now they believe that 25% US tariffs and Jaguar model cuts may drop JLR volumes by 14% year on year in FY26. They see EBIT margin falling to 7% in FY26-27 versus 9% in FY25. So another pain point is something that they're pointing out. They're saying that JLR FY26 EBITDA cut could be by 15%, but free cash flow continues to stay positive. JLR's EV EBITDA multiple cut to 2x from 2.5x market pricing in at 1.1 times. They're also seeing CV cycle bottoming in FY26, and rolling CV valuation in FY28 may add rupees 127 per share. They're also adding. They also say that this adds cushion versus US demand risk from tariffs. So largely mixed note coming in on Tata Motors, but it's a cut coming in rating as well as a target price. And on the back of that, the stock is low by almost 6.5% as we speak.
Alright, moving on, then coming to you, Arpit, you picked out Chambal Fertilizers. Now, fertilizer space is not looking, chemicals and fertilizer space is not looking very good, especially after the tariffs have kicked in. There is news of China dumping and so on, and so the chemical space is not looking very good, but Chambal Fertilizers has been a clear outperformer, and it has in fact moved up almost 16% in the last 1 month. So what do you see on the charts for this counter?
If we talk about the overall the chemical and the fertilizers pack, very selective counters are outperforming, as rightly mentioned. Within the space, Chambal and SR were the two outperformers. So if we look at the chart setup of the monthly setup on the Chambal, a classical range breakout on the monthly scale above 550 levels, almost a consolidation breakout, and follow buying was seen towards 620, 630 levels. On the weekly scale also, the base of the stock is shifting higher, forming higher lows from past few weeks. On the daily scale, the stock is consolidating at higher levels, but the good part is that the overall intrinsic strength of the stock is quite high and trading above short-term moving averages. So looking at this setup wise on the all time frame analysis, definitely the stock has further room to hit new life highs towards 645, 660 levels. So Chambal can be long with support of 590 for an upside move towards 660, 670 levels.
All right, moving on then to the high flyer in trade today, that is really giving a lot of support to Nifty Bank, and that's HDFC Bank. That's come out with its operational updates and positive operational updates there. The average deposits have jumped 15.8% on a year-on-year basis. As of 31st March 2025, the average advances under management have increased 7.3% on a year-on-year basis. And there's also a positive note coming out from Jefferies that's maintaining a buy call on HDFC Bank with a target price of 2,120 rupees per share. I feel that the quarter 4 loan growth is at 5.4% versus the earlier 3% in quarter 3, which is a big positive. Retail is also up 9% on a year-on-year basis. The CRB is up 3% and the COP is down 4%. Now the AUM is also up 8% while the deposits are up 14% on a year-on-year basis, and also they need less of a correction in FY26 to FY27, and on the back of that, Jefferies is maintaining a positive call coming in on HDFC Bank with a target price of 2,120 rupees. On the back of that, HDFC Bank is up 1.3% in trade.
Okay, so that's the reason why HDFC Bank is doing well. Strong set of quarter 4 updates coming in. But can't say the same for Angel One. Rabinder, very weak set of quarter 4 updates is what we are hearing. And 6.5% lower is where the stock is. Tell us what is ailing the stock today.
Well, Angel One has announced its Q4 monthly business update, and the company's Angel One added a 4.7 lakh clients in March compared to an addition of 4.9 lakh in February. And on a month-on-month basis, Angel One gross client acquisition fall by 2.2%. On a year-on-year basis, it is down by almost 44%. And the company's average daily orders rose to 8.2% from the last month to 53.7 lakh, but fell by almost 27% when compared to same period last year. And the company's number of order also down by almost 31% year-on-year basis, and the equity market share also down by 60 basis point. Company's Q4 average daily order also reduced by almost 24% quarter-on-quarter basis, and Q4 client booking also reduced by 0.5%. Remember that recently Kotak Institutional Security has initiated coverage on Angel One with a buy rating and target price of rupees 2,800. And if we look at the fall from the all-time high, then the stock is down approx 40% from the all-time high level, and stock was almost down by 5% in yesterday's trading session. But today, back of this business update, stock is down around almost 7%.
Okay, so that's the take coming in on Angel One. Arpit, coming to you, Marico is something that you picked out for us on the charts. Fundamentally, when we see yesterday quarter 4 update, very strong numbers coming in for Marico and looking good for that company. Technically on the charts, tell us what's it looking like. Last 3 months, it's managed to at least stay in the green amid a market that has been shaky. It's not done all that much, but nonetheless, it's been in the green. Do you believe that this could sustain going ahead as well?
Talking about Marico, if we talk about the overall FMCG pack has been quite sluggish, but we have seen good bounce from the lower levels. And if you talk about Marico on the monthly scale, relative to the chart structure is quite strong. So on the monthly scale, it has retested the previous breakout zone around 620, 640 levels, a strong bullish candle. On the weekly scale, from past 4 weeks, it is forming higher highs, higher lows in spite of market weakness. And on the daily scale, if you see, slowly, steadily, the stock has managed to surpass the short-term moving averages above 250 DEMA, and slowly, steadily, the stock is likely to move higher. So looking at the chart specific wise, the relative strength of the counter is quite strong, and we can see again move of 4 to 5% from current levels towards 700, 705 levels. So Marico would be a preferable within this FMCG pack with a major support near 640, 45 levels for an upside move towards 700 and then 750 levels.
Okay, so 700 and 750, next key targets to watch out for on Marico on the charts. Let's refocus and talk about a stock that's not doing all that well in today's trade, and that's L&T Finance. Is on the back of its quarter 4 update, which is largely mixed because they've announced that their retail disbursements for quarter 4 were at 14,870 crores, registering a degrowth of roughly 1.2% compared to 14,531 crores in quarter 4 of the previous year. Rural business finance disbursements were at 5,110 crores, which is down 11.4% year on year. Farmer finance disbursements were up on the flip side, 14.5% almost on a year-on-year basis. Urban finance disbursements came in at 6,100 crores, also up roughly 2% year-on-year. And SME finance disbursements came in at 1,520 crore rupees in Q4, which is up 25% on a year-on-year basis. So all in all, segmentally, it's been a mixed move coming in for L&T Finance. The value of the acquired portfolio for Q4 was at 390 crore rupees, and the retail loan book at the end of Q4 was estimated to be roughly 95,100 crore, which is an uptick of almost 19% on a year-on-year basis. So largely mixed set coming in, but not all that bad. And on the back of that, the stock is lower by almost 1% as we speak.
All right, moving on then to another counter which has come up with its business updates, and that's Bajaj Finance. Ravinder, tell us what does the quarterly update look like?
Has come out with the business update, and the company's customer franchisee as of 31st March 2025 stood at 101.82 million as compared to 83.64 million as of 31st March 2024. In Q4 FY25, the customer franchisee increased by 4.7 million, and the new loans book grew by 36% to 10.7 million in Q4 FY25 as compared to 7.87 million in Q4 FY24. And if we talk about AUM, then the AUM grew by 26% to approx 4,16,750 crore as of March 31st March 2025 as compared to 3,30,615 crore as of March 31st March 2024. In Q4 FY25, AUM grew by approximately 18,700 crore, and the company's deposits stood at approximately 71,400 crore as of 31st March 2025, and the customer franchisee as of 31st March 2025 stood at 101.82 million. And the so back of this note, Bajaj Finance is in focus in today's trading session.
Okay, so looking good, and good moves coming in on Bajaj Finance amid a market that's largely, sideways. But Arpit, you've also picked out Bajaj Finance for us on the charts, and year to date the stock has done really well, 25% uptick coming in on the stock price. Do you believe that this rally that the stock has seen seems sustainable on the charts going ahead?
As we're talking right at the start, also we talk about the financial and the banking space is relatively outperforming. And if you look at the overall NBFC space, last couple of months has been quite good. If we talk about NBFC space, Bajaj Finance has been a top pick. So technically, it gave a range breakout on the monthly scale after almost 3.5 years in the January series above 8,200 levels. And slowly, steadily, the base of the stock has shifted higher. On the weekly scale also, it has retested its previous breakout zone around 8,350, 8,400 levels. On the daily scale, it is forming higher lows and negative the formation of lower highs after almost 6 to 7 sessions, comfortably trading about its 50 DEMA. And look at the chart specific wise, definitely we can see 4-digit or 5-digit figure in coming 6 to 9 months positionally. And on the immediate basis, definitely the stock can head back towards its previous lifetime high near 9,000, 9,250 levels. So Bajaj Finance would be a top pick within this space with a major support of around 8,400, 450 levels for an upside move towards 9,000 and then 9,250 levels.
All right, that was the last talk for the show. We completely timed out on this edition of Market Fatafat. Arpit and Ravinder, thank you so much for joining us. Snehi and I will take your leave. With that, it's a wrap. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.